Well, for the first time in 7 days, I'm not telling you that US markets hit an all-time high in trading overnight. In fact, they fell, as did markets around the globe over the last 24 hours. Here in Australia, although futures had indicated a fall of almost 1%, we did a little bit better than that, finishing just in the red. But the pressure that we saw in Australia was repeated around the globe. Hong Kong in particular was under pressure in trading yesterday. That pressure fed into European trading and then into the US. And all three of the major indices in the US finished in the red. Now, that's quite curious given the macro developments, because there's growing confidence that trade deals between Europe, the US and China will all be struck, and that at the very least there will be time bought. That is, tariffs won't be introduced while trade talks continue. And that confidence around that scenario turned up in the US dollar. US dollar strength has continued, and it does appear that the support for the US economy that's coming through and the confidence around the outlook for the economy is showing up in that dollar strength, up around 148.5 Japanese yen and down to around 115 and a third euro. That strength and the strength we're seeing in bond markets and the rally that we saw in the 10 years that took them down to 4.32% points to a higher level of confidence amongst investors that the economic outlook continues to improve. And given where we're sitting as a market near all-time highs, that has very serious implications for investment. And although we didn't see any gains today, the economic data that we saw overnight, including some housing data and some trade data, does suggest while tariffs have had an impact, that confidence that they won't have a longer-term impact continues to buoy the markets. So we're looking at some US reports, of course, as the reporting season goes on. Some big hits. Novo was down 22%, and the impacts it reported seemed to weigh on the sector. We also saw more caution over tech results on the back of Spotify. Its surprise reported a loss for the quarter for the first time, and its share, that really surprised investors. Its shares took a tumble, down 11.5% in overnight trading. And as you can see here, that red candle on the right of the chart represents the trade last night, and it was quite a dramatic turnaround. You can see that Spotify had already come off its highs. There were some concerns particularly about subscriber growth leading into this result, but it appears that the actual result was much worse than most investors expected. And that dramatic sort of drop, the gap between the previous trading and the trading overnight, and the fact that the market opened lower and then continued downward, does suggest there's downward momentum in Spotify, and in the short term we could see further downside for its stock. So plenty coming up for investors to consider, and of course the biggest news this week will be the interest rate decision from the US Federal Reserve. Very important. At this stage, no expectations there'll be any rate cuts, but of course with the market forecasting 2 more rate cuts in the US before year end, any commentary from the Fed that suggests otherwise in particular could have a dramatic impact on the market. So something to look out for. The GDP data and national accounts data will be important as well, remembering that it's the PCE component of the national accounts that the Fed prefers as its measure of inflation. So there'll be a lot of focus on that PCE data. And we've also got payroll, non-farm payrolls coming out on Friday night. And remembering that these jobs are also at the heart of the Fed mandate. It'll be a big week for economic news from the Fed itself and in terms of statistics that might influence its future behaviour. So lots for the market to digest there. We'll also have CPI data out here this morning. The core and trimmed mean will be the key reads once again, because they'll speak to the RBA's mandate. Now, we have seen a tick up in global inflation, and particularly in the US, but also in other parts of the world. And if that feeds through into Australia, once again, we could see a reaction in the share market, because here as well, there are expectations that the next moves for the RBA are downward for rates. And if we see any evidence in the inflation data today, the CPI data released late morning for East Coast traders, we could see a reaction in the market. There's suggestion that interest rates might not be going down as fast as the market is currently expecting. We've got a negative lead into trading today, but it's only 6 points. The index futures down 6 points in overnight trading in reaction to that selling, possibly reflecting the idea that we're under pressure already yesterday. We continue with our resource themes. Santos and Woodside had some very strong gains in trading yesterday, and given that we've just seen another 3.75% jump in the oil price overnight, we could see further support for those oil and gas giants in trading today. One of the features, however, in trading yesterday were the uranium stocks. You might recall that on Monday, Boss Energy reported, and the report was poor. In fact, it slashed its estimates of its reserves, it slashed its production forecast, and it slashed its revenue forecast. And the CEO, not surprisingly, given the big change in outlook for the company, stepped down to be replaced by the COO. So on the chart, you can see Boss Energy is the red line there, and you can see that dramatic fall in trading. But it does appear that it's now having a bit of a halo effect across the sector. And this might be a bit of a reality check. In uranium mining, and particularly in these three stocks, that is Paladin, Deep Yellow and Boss Energy, production is only just coming online. And the reality is there's not really revenues to back the frothy share market performances that we saw on the optimism that demand for data centers and artificial intelligence processing would see demand for electricity and therefore nuclear generation on the up. So it does look like we're having a bit of a reality check in uranium stocks at the moment, and the halo effect of that dramatic resetting of the outlook for Boss Energy has weighed on Paladin and Deep Yellow as well. So we could see ongoing pressure there as investors reassess that very optimistic outlook for uranium stocks. And while there may still be a strong case for nuclear generation of electricity, at the moment share prices might need further adjustment to reflect the true timeline and potential profits for uranium miners under that scenario.